Are you trying to make sense and navigate the complex US regulatory body system? In this video, we'll provide you with an overview of the main US regulatory bodies that exist, what are their key responsibilities, and which financial services sector they support. If you're finding valuable this video, make sure you subscribe to FinCrime Agent and press the thumb up. This will make it super easy for you to consume new videos going live on my channel, and it will allow me to create more contents for you. So with the housekeeping out of the way, let's jump right into today's video. Hi, I'm Marco Beranzoni and this is FinCrime Agent, my YouTube channel where every week I publish a new video to boost your awareness about anti-money laundering and financial crime prevention. Financial markets and corporations are regulated and supervised by a multitude of federal and regulatory bodies. These organizations each have their own set of tasks and obligations, allowing them to function independently while pursuing more broadly similar goals. Depending on the level of discussion you're having with different types of people, the usefulness or even the actual need to have in place some of these agencies can be challenged sometimes, but it's important to know that each US regulatory body was originally created with a specific purpose in mind and will most certainly continue to exist and operate for some time. In light of this, today I will provide you with an overview of several US regulatory bodies that operate in the financial sector within the United States. At the federal level, regulators can be clustered in the four following areas. Depository regulators, those are the Office of the Comptroller of the Currency, the Federal Deposit Insurance Corporation, the Federal Reserve for Banks, and the National Credit Union Administration for credit unions. Then we have two security markets regulators, those are the Securities and Exchange Commission and the Commodity Future Trading Commission. Then the third group is the government-sponsored enterprise regulators. Those are the Federal Housing Finance Agency and the Farm Credit Administration. And lastly, one consumer protection regulator, which is the Consumer Financial Protection Bureau. As part of this video, I will drill down only on the role of depository regulators and security markets regulators. If you also want to learn more about government-sponsored enterprise and consumer protection regulators, I invite you to read the Congressional Research Service document, which is linked in the video description, and this is the official document that I'm actually using as a reference for today's video. Okay, let's start with the Federal Reserve. This US regulatory body is one of the most well-known regulatory agencies in the world. The Fed regulates the largest, most complex financial firms operating in the United States. The Fed serves as the umbrella regulator for financial holding companies and is the primary regulator of all non-bank financial firms that are designated as systematically significant by the Financial Stability Oversight Council, of which the Fed is also a member. All banks with more than $50 billion in assets and designated non-banks are subject to enhanced prudential regulation by the Fed. In addition, the Fed is the principal regulator for savings and loan holding companies and security holding companies, a new category of institution formerly defined in security laws as investment bank holding company. The Fed's responsibilities are not limited to regulation. As the nation's central bank, it conducts monetary policy by targeting short-term interest rates. The Fed also acts as a lender of last resort by making short-term collateralized loans to banks through the discount window. It also operates some parts and regulates other parts of the payment system. It is also worth noting that Title 8 of the Dodd-Frank Act gave the Fed additional authorities to set prudential standards for payment systems that have been designed as systematically important. Let's now talk about the Office of the Controller of the Currency. The OCC was created in 1863 as part of the Department of the Treasury to supervise federally chartered banks. The OCC regulates a wide variety of financial institutions, but only for federally chartered banks. The head of the OCC, the Controller of the Currency, is also a member of the board of the FDIC and a director of the Neighborhood Reinvestment Corporation. The OCC has examination powers to enforce its responsibilities for the safety and soundness of nationally chartered banks. The OCC has strong enforcement powers, including the ability to issue, seize and desist orders and revoke federal bank charters. Let's now see the third depository regulators included in our list of US regulatory bodies. This is the Federal Deposit Insurance Corporation. Following bank panics during the Great Depression, the FDIC was created in 1933 to provide assurance to small depositors that they would not lose essentially their savings if the bank would go bankrupt or would fail to remain on the market. The FDIC is an independent agency that insures deposits up to $250,000 for individual accounts, examines and supervises financial institutions, and manages receiverships, assuming and disposing of the assets of failed banks. The FDIC is the primary federal regulator of state banks that are not members of the Federal Reserve System and state charter thrift institutions. In addition, the FDIC has broad jurisdiction over nearly all banks and thrifts, whether federally or state chartered, that carry an FDIC insurance. The National Credit Union Administration is the fourth and last depository regulator. The NCUA, originally part of the Farm Credit Administration, became an independent agency in 1970. The NCUA is the safety and soundness regulator for all federal credit unions and those states' credit unions that elect to be federally insured. It administers a central liquidity facility, which is the credit union lender of last resort, and the National Credit Union Share Insurance Fund, which insures credit union deposits. The NCUA also resolves failed credit unions. For those unfamiliar with credit unions, those are member-owned financial cooperatives and they must be non-for-profit institutions. With the NCUA, we now covered all the US regulatory bodies under the Depository Regulators Group. Let's now talk about securities markets regulators, starting with the Securities and Exchange Commission. Following the stock market crash of 1929, the SEC was created as an independent agency in 1934 to enforce newly written federal securities laws. Therefore, when Congress created the SEC, stock and bond market institutions and mechanisms were already well established and federal regulations was grafted onto the existing structure. The SEC is not primarily concerned with ensuring the safety and soundness of the firms it regulates, but rather with protecting investors, maintaining fair, orderly and efficient markets, and facilitating capital formation. The second US securities markets regulator, and the last one that I'm covering in this session, is the Commodity Futures Trading Commission. Like the SEC, the CFTC does not directly regulate the safety and soundness of individual firms. The CFTC's mission is to prevent excessive speculation, manipulation of commodity prices and fraud. Like the SEC, the CFTC oversees self-regulatory organizations, the futures exchanges and the National Futures Association, and requires the registration of a range of industry firms and personnel, including futures commission merchants like brokers, floor traders, commodity pool operators, and commodity trading advisors. Right, I admit that Today there were quite a lot of information to digest, and there is even more if you want to also learn about government-sponsored enterprise and consumer protection regulators. So if you are studying or building your knowledge about US regulatory bodies, the Congressional Research Service document, which is available from the video description, will be a great reference to start your research or continue your studies. And with that, I'm at the end of today's video. If this video was useful to you, you can show your appreciation and support my channel by subscribing to FinCrime Agent and press the thumb up on this video. Also, remember to check the description of this video so you can find useful links, including how to become part of our community on patreon.com. Lastly, thank you for watching, I hope you have enjoyed my video, and until next time, see you soon!